All right, guys, in the next 24 hours, 3 crypto bombshells will be hitting the market. I'm gonna show you what they are, how to position before they land, and one altcoin I think is about to explode. Every 4 years, Bitcoin's story has sounded the same. The halving hits, the market runs, the bubble pops, and everyone waits for the next one. That rhythm has been gospel for a decade. But right now, the script is breaking. You can feel it in the way volatility is fading, in the way capital is moving, and in the headlines of the biggest players in the world, guys, they're stepping in. And when you line that up with the timing of today's quarterly close, the setup, guys, well, it's just too good to ignore. So stay with me, because by the end of this video, you'll see why the old playbook doesn't work anymore, at least not exactly, and what the new one actually looks like, and the 3 huge news events that are about to collide. Plus, make sure you guys stay to the end, because I'm sharing an altcoin gem I think is prime to break out any day now. So if you guys are excited for the video, you know how to help out the channel. Do me a favor, destroy that like button. If you're new to the channel, hit that subscribe button, bell notifications. Let's get into it, guys. For years, traders swore by the 4-year cycle. It was simple. The halving cuts supply, price rips, everyone piles in, then the crash wipes it all out. Same script over and over. But look around right now. That rhythm feels, well, off. Bitcoin isn't trading like the wild animal it used to be. The chaos is getting quieter. Volatility, the thing that used to define every cycle, is falling back toward historic lows. And there's a reason. In 2014, institutions held basically nothing. They weren't even here at all. Less than 1% of Bitcoin. Today, it's closer to 20%. Bitcoin's not some niche corner of the market anymore. It's got pensions, asset managers, sovereign wealth funds, countries, everybody, all holding coins and thinking in decades instead of days. When you got that level of ownership, you don't get the same panic selling. You don't get the same blow off tops. You get quiet accumulation when the price comes down, and you get careful distribution when the market overheats. It reshapes the whole rhythm. And when you take a look at this chart, you'll see the proof. All the prior cycles had retail-led parabolic rallies, and they were fun to be around, guys. But this cycle, it's been a constant slow grind up. Even with the ETF outflows, liquidations, and all the headlines of fear, Bitcoin barely flinched compared to the previous cycles. That's structural adoption playing out right in front of us. Now, guys, on to this first bombshell I alluded to earlier. If the cycle rhymes with the past, we're now just 24 hours away from stepping into the most parabolic month in a 4-year calendar. That's October, or as we call it, Uptober. History backs it up as well. October has been Bitcoin's strongest month, with average gains over 20%. Here's the catch, though. My friend Ivan on Tech mentioned this earlier today, and our team double-checked the data. The fireworks usually come late. In 4 of the last 5 years, the big moves didn't start until the 3rd or 4th week of October. The early part of this month can feel quiet, even disappointing, before momentum finally explodes. So don't let a slow start shake you guys. Don't think October's canceled. October's strength has always been on the back half. That makes right now the time to get positioned for what's coming. As we told you guys before, and as we had Ben Cowan on the show, which historically, he just looks at history and looks at probabilities, right? And the chance is that we see a strong rally for Bitcoin in October, and that's when Bitcoin dominance increases. So Bitcoin compared to alts is going to increase. And then as we get into November, that's when we'll start to see Bitcoin dominance falling down and altcoins really starting to run hard. When you zoom in on where Bitcoin is actually being held, you start to see a new pattern of adoption unfolding in real time. In Brazil, a company called Orange BTC just shocked the leaderboard. They bought 3,600 Bitcoin worth about $400 million, immediately becoming one of the biggest corporate holders on the planet. They're preparing to list on Brazil's main exchange and launching a nationwide Bitcoin education platform. That's pretty cool. That feels like the start of a Latin American arms race. Very, very smart, right? Guys, imagine what's going to happen to all these treasury companies in the future. In China, you've got Cango adding another 141 Bitcoin, bringing their total to 5,708 Bitcoin. That's in China. Investors in mainland China now have one of the few listed vehicles giving them indirect exposure to Bitcoin. That channel of access in a country with tight restrictions carries enormous weight. We've never would have thought we would even see China having the possibility like this a year ago. Japan has turned into a pressure cooker for Bitcoin treasuries. Mac House stepped in with 112.6 Bitcoin, joining Metaplanet and Anap Holdings. Even with relatively small holdings, companies there are trading at massive premiums because of the tax advantages for corporate Bitcoin holders. Investors are paying nearly 4 times book value just for exposure through equities. And in the US, Strategy added 186 Bitcoin last week, bringing their total to almost 640,000. Guys, that's over $70 billion worth of Bitcoin at today's prices, representing around 3% of the entire Bitcoin supply that ever existed. They also just started paying dividends on their preferred shares. That means Bitcoin is doing more than just sitting idle on their balance sheet. It's tied directly into corporate finance and yield structures. Each of these moves adds up to something bigger. Balance sheets across continents are filling with Bitcoin, and those holdings are no longer just passive. They're being tied in education platforms, public listings, tax arbitrage, and even dividend payouts. That's adoption showing up in places most people never thought to look. Well, me certainly, I'm wondering, when do we have this global arms race for Bitcoin? To be honest, I would have thought that it would have happened by now. And what I keep thinking is going to be the thing that actually gets the thing over the line will be when America finally implements the strategic Bitcoin reserve and starts actively buying. But even if that doesn't happen, as you can see from the macro news, if you just look at what's happening globally, it might take longer to do that without a big catalyst like that. But eventually, as all these other companies, whether they're buying 20 Bitcoin, 100 Bitcoin, 1,000 Bitcoin, 5 Bitcoin, all over the world, they're already starting to build a reserve in a new currency, in Bitcoin reserve currency, instead of their crappy fiat they were holding before. So you already see this global reserve starting to take place. The question is, when will the government start to do it? And the answer is that we already know that some of them are, right? El Salvador and others, and the United States and China all have Bitcoin on reserves. When will they start accumulating? That's the real question. And it's going to happen. The question is just when. Every past cycle had its signature spikes: a crash from bad China headlines, a shock from a pandemic, a blow off top from retail euphoria, a Sam Bankman-Fried. Those moments sent Bitcoin's volatility absolutely wild. But this year, the story is completely different. Even with nearly $1 billion in ETF outflows and heavy liquidations in the last week, realized volatility has stayed pinned near historic lows. Bitcoin is acting very much like a stable coin right now, right? The market absorbed shock after shock without breaking its stride. That is the fingerprint of deep, steady capital holding a scarce asset. You can see the same shift by looking at these digital asset treasuries, right? They exploded in popularity because they created a reflexive flywheel. Raise money, buy Bitcoin, boost the stock price, raise more money, buy more Bitcoin, etc. For a while, it looked unstoppable, but the market is growing tired of those heavy leverage plays. Strategy shares have wobbled and started to underperform Bitcoin. Metaplanet in Japan, once a darling, well, it's cooled as well. These companies are still massive holders, but the aura of easy gains around them has faded. That signals a transition. The market is moving away from rewarding quick, leverage treasury announcements and toward long-term, sustainable balance sheet strategies. The days of wild whiplash around every DAT headline are giving way to a steadier era of corporate Bitcoin integration. And guys, for me, on one hand, I'm actually really glad to see that this DAT hype is slowing down and losing steam. I think that corporate treasuries should be holding Bitcoin and other blue chips on their balance sheets. But I personally had a problem with these companies where it was their only strategy. Because at the end of the day, the reality is that people, if they want exposure to these underlying assets, they should just buy them, not the equity that's trading at a premium and blah, blah, blah. And as we get to a more clear legal landscape, hopefully by the end of the year, these companies should be able to hold these assets on their balance sheet and not have to buy it through some artificially manufactured and engineered financial instruments, right? And so I think that what the future is real companies with real revenue that have reserves should be holding these assets on the balance sheet, and it should not be their only strategy. It should just be part of their financial strategy on what they do with their cash reserves and their profit. So guys, when you want to see where the world is heading, watch the foundations as they're being rebuilt. Right now, the very plumbing of global finance and the internet is shifting on chain. You've got Swift, right? Like the backbone of global banking, the huge Swift where all money travels on. They announced they're designing a blockchain-based shared ledger with consensus. Yep, that's the same consensus that helped build Ethereum. Over 30 of the world's largest banks are involved. JP Morgan, HSBC, Bank of America, Santander, PNB Paribas. This ledger is built for real-time, 24/7 cross-border payments, with smart contracts sequencing and validating every move. That's the heart of the old system, testing blockchain rails at institutional scale. Swift has to upgrade. I mean, we've been talking about this forever, ever since we talked about Chainlink and the CCIP. This we could have seen coming a million miles away, but it's interesting they're building with consensus, and that's going to be probably using Ethereum. At the same time, the internet itself is getting a payment layer. Coinbase and Cloudflare have launched the X402 Foundation. Their protocol uses get this, the 402 payment required status code to embed payments directly into web interactions. AI agents, apps, APIs, all of it able to transact natively. And Cloudflare is adding Net Dollar, a stablecoin designed for the agentic web. It's dollar-backed, global, and aimed at microtransactions and machine-to-machine payments. That is internet-native money becoming real infrastructure. And while foundations are being rebuilt, regulators are shifting tone. In Washington, the SEC and the CFTC held their first joint roundtable in 14 years. And it only took crypto to do it. The acting chair, CFTC Caroline Pham, declared, "The turf war is over." SEC Chair Paul Hawkins followed with, "Crypto is job one. We must work in lockstep." For years, the fight was over who controlled crypto. Now the message is in harmonization, clarity, and momentum. And we're seeing that right now with ETFs. The SEC's own website shows that the 19B4 filings for Solana, XRP, Cardano, Litecoin, Dogecoin, Polkadot, Hedera, and Ethereum staking ETFs have been withdrawn and moved under the new generic listing standards. What that means is simple, guys. The old process, where each ETF application had to grind through months of back and forth, is being replaced by a streamlined fast lane. Those withdrawals are confirmation that these products are shifting into that easier approval track. Bloomberg analyst Eric Balkunas summed it up bluntly. He said the odds are basically 100% for a Solana ETF at this point. The 19B4 process no longer matters under the new standards. The only step left is the S1 review, which we've covered on the show many times before, which actually covers the fund's actual prospectus and disclosures. Solana's updated amendment has already been filed, which means a formal green light for the SEC's corporate finance division could drop literally any day now. Banking systems, internet protocols, and regulators all aligning on blockchain at the same time. Adoption is no longer waiting at the edge. It's moving directly into the system's core. When the foundations of finance are being rebuilt, the question is always about flows. How many positions around that shift? Right now, timing is everything. Today, both the monthly and quarterly candles lock at the same moment. Something traders watch closely because it often sets the tone for the weeks to come. ETF flows looked weak last week, but QCP pointed out what I already told you guys, that the selling pressure came mainly from quarter-end basis trades unwinding. Not a collapse in demand, not a structural flaw, but just these trades unwinding. And the market soaked up those redemptions pretty smoothly, which is exactly what you want to see heading into Uptober, historically one of Bitcoin's strongest months. And on top of that, crypto native liquidity is about to get a boost. Here's the second bombshell, guys. That is going to go off today, actually. The FTX Recovery Trust is sending out $1.6 billion to creditors with claims under $50,000 and select unsecured creditors, bringing total distributions to more than $8 billion so far. Payments are going through BitGo and Kraken, either in dollars or stablecoins. I'm supposed to get one of these payments today. What should I do with it, guys? Let me know in the comments below. It's well into the six figures. Where should I put the money? Should I spend it on something dumb, or should I put it into an altcoin or Bitcoin? Let me know in the comments below. What would you guys do? Let's say with $100,000 or something, $200,000. Let me know in the comments below. I would love to know your thoughts. And I can already see the bots telling me to go put money in XA73842, whatever. And guys, while there might be a lot of news all over crypto Twitter about these FTX distributions, and while once upon a time, I thought they were going to be a big deal, the honest truth is this is not going to move the needle. It's not going to move the market. A lot of that money will likely be made back into the crypto industry. For example, I'm getting my payment in stablecoins. I promise you, they're going back into, they're going out of stablecoins into crypto. Exactly what that is, I'm not really sure, but a lot of people are making a big deal out of this. I don't think it's as big of a deal as a lot of people are saying it is. And guys, on to the third thing that's happening, the third bombshell. The US government shutdown is looming, with Congress pushing negotiations down to the wire. Within the next 24 hours, we'll find out whether the government shuts down or it keeps going. I don't know if you guys know, but like, do you guys remember all of these talks about the government shutting down pretty much every year? It always comes down to the wire, and then something happens and then negotiations are made and things keep going as usual. So this is making big news all over the place right now. Why? Because if the government shut down, then you can't do all, there's a lot of things that aren't operating. People aren't doing the financial data. They're not getting the information to the Fed. The Fed can't make decisions on the balance sheet to the interest rates and these kind of things. But the reality is it's very rare in history that it's ever really truly affected our markets. And then there's the dollar, right? The dollar index has dropped more than 10% this year. Its worst performance since 1973. Palau pointed out that according to the Fed's own model, every 10% drop in the dollar adds 30 basis points to inflation. That kind of currency weakness makes hard assets like Bitcoin more attractive as protection against fiat declines. These are the kinds of catalysts that don't just move prices for a week, they shape how capital positions for the rest of the year. And when you combine all of this together with the seasonality of the Q4 after halving, all probability leads to a really, really strong and interesting next few months. And guys, flows aren't just happening in the ETF and corporate treasuries. It's also really awesome to see that it's showing up in DeFi really, really strong. And that's a signal worth paying attention to. If you've been keeping up with the videos and the channel over the past week, you know that we've talked about perp dexes, and they've been red hot. And actually right now, if you look at Aster, it's at an amazing pullback. At the time of filming, $1.50. There's a huge unlock tomorrow. That's going to add about 3 times to the circulating supply. So potentially this is people taking money off the table, preparing for the unlock. Let's see what happens tomorrow. But if you're looking for a good entry into Aster today, tomorrow, the next day might be good time to consider doing that. Not financial advice, but that's what I'm looking at, because I think that Aster by the end of the year goes to 10, 15 bucks, and it's sitting at $1.50 right now. To me, I think it'll outperform Bitcoin. I think it'll outperform Solana. It'll outperform Ethereum by the top of the market. But guys, there's another perp dex that I've been talking about on the channel for a long time, and it's really starting to finally get the attention it deserves. We've talked about it for a long time, right? And it's got a 2x in just the past few days, but for very, very good reason. And it's part of one of the fastest growing ecosystems that we've talked about. You guys know on this channel, I talk about Sui all the time. And you guys know that I'm an advisor for Bluefin. And that's not what I'm talking about today. I'm talking about it today because their volume has been exploding. It is the number one perp dex in the Sui ecosystem. So every ecosystem has their perp dex, and Bluefin is the one on Sui. So if you're bullish on Sui, if you think Sui's gonna have a huge run, this is the one. And they've done over $78 billion in volume so far. And it's the biggest and most popular dex on Sui, right? So, and then also on October 1st, you have a quarter of the revenue is going to start to be used for Blue token buybacks. So currently, with the current market cap of $60 million, a fully diluted valuation of about $150 million, it's far, far less than the other perp dexes. I mean, also rightfully so. It's got much less volume than, let's say, Aster or Hyperliquid. But when you look at it compared to other perp dexes and think that these things are going to be getting a lot of attention, well, then there's a reason why I've been so bullish on Bluefin ever since it launched, and also till today. Also, guys, you have Andre Cronje over at Sonic, who just raised like $200 million at $1 billion valuation for his new Flying Tulip DeFi protocol as well. I'm not so interested in that, to be honest with you guys, but what I am really interested and excited about is DeFi. Like, I do not like centralized exchanges. I hardly ever use them. I use them when I have to, but I love being able to just connect my wallet and use a DeFi protocol like Aave or maybe Aster, or definitely I use all of the decentralized exchanges like Uniswap or 1inch or Phantom or whatever, right? Jupiter. I love these things. I love that anyone in the world can use them. Don't have to register and sign up. No one needs to know your business. It's just great. And this is what DeFi is. It's the lowest hanging fruit for adoption in crypto right now, because people understand finance, and they understand that decentralized finance is becoming just as good, if not better, than centralized finance as far as even user experience, but has all these other advantages that over centralized finance that to make it just far more efficient, faster, cheaper, more private, etc. So guys, where does this leave us? The old 4-year cycle was built on halving and retail emotion, but the script is giving way to something much larger. Institutions now hold 1 in 5 Bitcoin. Corporate treasuries are stacking across continents, and regulators are calling crypto their top priority. And the very plumbing of finance is moving on chain. And right now, we're about to get clarity on the government shutdown, billions coming back into our industry from FTX, and Uptober is finally upon us. But remember, it's the second half of October that usually really gets going. So be patient between now and then. So guys, that's gonna wrap it up for today. I hope that you enjoyed it. If you did, hit that like button. And guys, as always, stay sharp, stack your Satoshis. Let me know what other altcoins you're looking at. Are you stacking ETH? Are you stacking Solana? Are you stacking AVAX? Are you stacking SUI? Are you stacking Aster? Did you get into wealth? Did you get into Hadron Energy that did a 15x in the past couple months? Crazy, right? That's uncommon wealth. Do you hold wealth? Are you a top 100 staker? Are you getting in on the SpaceX deal? SpaceX 10th test run for the big heavy rocket, right? So for Starship. Do you want to own a piece of that? You can own a piece of that through Commonwealth. Check out WLTH.xyz. All right, guys, I'll catch you on the next one. See ya.